There are 6 medical bills that seniors across America are paying every single month that federal law says they do not have to pay. Not some seniors, not just the ones who are struggling, not just the ones with complicated situations. Seniors at every income level are overpaying at least one of these 6 bills right now, and the only reason it keeps happening is that the people collecting that money have absolutely no financial incentive to tell you it does not have to be that way. Before I go any further, I need to address the single biggest reason people click away from a video like this, because it is the same reason thousands of dollars stay on the table every single year. If you are comfortable in retirement, pension, some savings, maybe a home that has gone up in value, you are already thinking this list is for someone else. It is for the senior who is really struggling, not for you. And if you are living mostly on Social Security, you are thinking the opposite. You are thinking the big wins here are for people with money, not for someone in your situation. Both of those assumptions are wrong. And I am going to prove it to you on every single one of these 6 bills by telling you exactly which group wins and how much. Because the honest truth is that the system overcharges seniors at every income level. It just does it in different ways depending on where you sit. There is a version of this list with your name on it regardless of what your monthly income looks like. Here is the one idea that ties all 6 of these together before we get into them. Being legally protected from a bill and actually not paying it are 2 completely different things. Federal law does not automatically refund you. Medicare does not send you a letter saying you qualify for something better. Your doctor's billing office does not flag your account and say we cannot charge this person. The protection exists in the law. The money stays where it is until you claim it. That is the entire reason this video exists. I'm Harris. I am an enrolled agent, which means I am federally licensed to represent taxpayers directly in front of the Internal Revenue Service. I work with real retirees at every income level, and I will tell you the pattern I see most often. It is not fraud. It is not mistakes on complicated returns. It is straightforward, careful people in their 60s and 70s paying medical bills they never legally owed month after month, year after year, because no one sat down and explained that they did not have to. That is the most expensive kind of mistake there is, because it is invisible. There is no notice. There is no penalty. There is just money leaving your account every single month that never had to. So let us fix that right now. 6 bills. Stay until the end, because bill number 6 is the one almost nobody talks about. And for people who have been doing things the right way their entire life, it can be the most valuable of all. Before we get into it, if you are not subscribed to this channel, do that right now and turn on the bell. The rules around Medicare, Social Security, and retirement taxes change every single year. Income limits shift, new programs open, old ones get updated, deadlines come and go. I cover all of that in plain English so you always know what you are actually entitled to before it is too late to act on it. The people who are subscribed stay ahead of this. The ones who are not tend to find out after the deadline, after the wrong amount has already been deducted, after the appeal window has quietly closed. Subscribe now, and let us get into the 6 bills. Bill number 1 is your Medicare Part A premium. This is the one that surprises people most, because most seniors do not even know Part A has a premium at all. They think Medicare is just the $185 monthly charge for Part B. But Part A, the part that covers hospital stays, skilled nursing, facility care, hospice, and home health care, has its own separate premium. And for a significant number of seniors, that premium is being charged when it legally should be zero. Here is the rule. If you or your spouse worked and paid Medicare taxes for at least 10 years, which is 40 quarters, your Medicare Part A premium is zero. Not reduced, not discounted, zero. The vast majority of Americans who worked a standard career have hit that threshold without ever realizing it mattered. But here is where the overpayment happens. If there is any confusion about your work record, a gap in employment, a period of self-employment that was not properly credited, a spouse's work history that was not correctly linked to your record, Medicare may be charging you a Part A premium you never owed. The 2026 Part A premium for people with fewer than 30 quarters of work history is $518 per month. For people with 30 to 39 quarters, it is $284 per month. If you are paying either of those numbers, and you have a work history that should qualify you for the zero premium rate, that is, money leaving your account every single month for no legal reason, here is what to do. Log into your Medicare account at medicare.gov and look at your current Part A premium. If it is anything other than zero, call Medicare at 1-800-633-4227 and ask them to review your work record and your spouse's work record. Bring your Social Security statement, which shows your earnings history by year. If there are missing quarters that can be documented, SSA can correct the record and your Part A premium drops. This one applies to everyone regardless of income. There is no means test. If you work the quarters, the premium is zero. Full stop. Bill number 2 is your Medicare Part B premium through the QMB program. Most seniors know they pay $185 a month for Medicare Part B. It comes out of their Social Security check automatically every month, and most people just accept it as a fixed cost of retirement. What most people do not know is that there is a federal program that pays that entire premium for you. Not a discount, not a partial credit, the full $185 gone, paid by your state Medicaid office on your behalf every single month. The program is called QMB, Qualified Medicare Beneficiary, and it is part of the Medicare Savings Programs. QMB does not just cover the Part B premium. It covers your Medicare deductibles, your co-payments, and your co-insurance. Essentially, every out-of-pocket cost that Medicare would normally pass on to you, QMB eliminates. And here is the federal law piece that almost nobody knows. If you are enrolled in QMB, providers are legally prohibited from billing you those costs. It is not a suggestion. It is a federal violation for a doctor or hospital to bill a QMB enrollee for Medicare cost sharing. If you are enrolled and a provider is still sending you bills, you can report them. The income limits for QMB in 2026 are approximately $1,350 per month for a single person and $1,824 per month for a married couple. If your income is modestly above those numbers, there are 2 additional tiers, SLMB and QI, that will at minimum eliminate the $185 Part B premium, even if they do not cover the full cost-sharing protection. This one is clearly the win for the lower-income senior. If your monthly income is in that range, this is the single most impactful item on this entire list. The fix is one application. Call 1-800-MEDICARE or go to medicare.gov to find your state's Medicaid office and apply. The application is free. The savings start the month after approval. Bill number 3 is your prescription drug costs under Extra Help. A lot of seniors on Medicare Part D assume they are getting a reasonable deal on prescriptions because they have coverage. Coverage and affordable are 2 very different things. The standard Part D copays without assistance can run $50, $80, $100 or more per month for a single medication. For someone on 4 or 5 regular prescriptions, that math gets painful very quickly. There is a federal program called Extra Help, also called the Low Income Subsidy, and if you qualify for it, your prescription situation looks completely different. No Part D deductible, no coverage gap. The maximum you pay per prescription is $4.90 for a generic drug and $12.15 for a brand name drug. That is the ceiling, not the average, the ceiling. The income limit for Extra Help in 2026 is approximately $23,940 per year for a single person and $32,260 for a married couple. And here is the shortcut that most people miss. If you are already enrolled in QMB or any of the Medicare savings programs I just described, you are automatically enrolled in Extra Help. No separate application, it just kicks in. If you have not done either yet, apply at ssa.gov or call 1-800-772-1213. This is the win for the lower to moderate income retiree. But do not tune out if your income is higher, because bill number 4 is where the comfortable retiree gets their money back. Bill number 4 is the IRMAA surcharge on your Medicare Part B and Part D premiums. IRMAA stands for Income Related Monthly Adjustment Amount. It is a surcharge that Medicare adds on top of your standard premiums once your income crosses certain thresholds. And by definition, this one only hits people who have done well financially. If your reported income exceeded $103,000 as a single filer or $206,000 as a married couple in a prior year, Medicare is charging you extra. At the lowest IRMAA tier, the surcharge adds $74 per month to your Part B premium. At the highest tier, it adds $443 per month. That is on top of the standard $185. Some seniors are paying $628 per month for Medicare Part B alone, deducted silently from their Social Security before it ever reaches their bank account. And here is the trap inside the trap. Medicare does not use your current income, they use your tax return from 2 years ago. So if you retired last year, if you sold a property, if you did a Roth IRA conversion, if you had any one-time income event in 2024 that temporarily pushed your earnings higher, Medicare is charging you a surcharge in 2026 based on money you are no longer earning and may never earn again. Most people just pay it. They see a smaller Social Security deposit and they assume that is correct. It is not necessarily correct, and there is a form specifically designed to fix it. The form is SSA 44. It is a life-changing event appeal, and retirement is specifically listed as a qualifying event, along with the death of a spouse, divorce, loss of a pension, and reduction in work hours. You file the form, you show Medicare what your income actually looks like now, and they recalculate your premium based on your real current situation, rather than the 2-year-old tax return. I have seen that single form put thousands of dollars per year back in a retiree's pocket. You can download SSA 44 directly at ssa.gov or pick it up at any Social Security office. This is clearly the win for the comfortable retiree. If your income has dropped since 2024 for any qualifying reason and your Medicare premium is higher than $185 per month, this appeal is free. It is legal, and there is no downside to filing it. Bill number 5 is the copays, and cost sharing your provider is legally prohibited from charging you. This is the one that makes people genuinely angry when they find out, because it is not about a program you failed to apply for. It is about a bill you received that should never have been sent. Federal law contains a provision called balance billing protection for certain Medicare beneficiaries. If you are enrolled in QMB, which we covered in Bill number 2, providers who accept Medicare are legally prohibited from billing you for cost-sharing amounts. That means deductibles, copays, and coinsurance for Medicare-covered services. They cannot bill you. And yet every single year, QMB enrollees receive bills they do not legally owe because the provider either does not know the rule or is hoping you do not. If you are enrolled in QMB and you receive a bill from a doctor, specialist, hospital, or lab for Medicare, cost-sharing a copay, a deductible, a coinsurance amount, you do not owe that bill. You have the right to dispute it. You can call your state's Medicaid office and report the provider. You can also contact your state health insurance assistance program known as SHIP, which provides free counseling specifically for situations like this. Beyond QMB protections, Medicare Advantage plans have their own out-of-pocket maximum rules that cap your annual cost-sharing exposure. If you are in a Medicare Advantage plan and your provider is billing you amounts that push you over your plan's annual out-of-pocket maximum, those bills are not valid. Check your plan documents, know your annual maximum, and do not pay cost-sharing that exceeds it. This one applies most directly to the lower-income senior who is enrolled in QMB, but the Advantage plan protections apply at every income level. Know your plan, know your maximum, do not pay bills that exceed it. Bill number 6 is the one almost nobody talks about, and for the retiree who has done everything right, it can be the most significant of all. It is the tax you are paying on Medicare premium increases that you can legally offset, and it connects directly to a strategy that most financial advisors never mention. Here is the situation. As your income in retirement comes from IRA withdrawals, investment income, or other taxable sources, that income can push your provisional income higher. Higher provisional income means more of your Social Security is taxable. It also means you are more likely to trigger the IRMAA surcharge we talked about in Bill number 4. So you end up in a situation where every dollar you pull out of a retirement account does not just get taxed as income, it also increases your Medicare premium and increases the portion of your Social Security that gets taxed. $1 of income effectively costs you 2 to 3 times what you expect. The tool that breaks this cycle is the Qualified Charitable Distribution, or QCD. If you are 70 and a half or older and you have money in a traditional IRA, you can direct up to $108,000 per year from that IRA directly to a qualified charity. That money is completely excluded from your taxable income. Not deducted, excluded. It never shows up as income at all. Here is why that matters for medical bills specifically. The QCD lowers your reported income. Lower income means lower provisional income. Lower provisional income means less of your Social Security gets taxed. And lower income means your IRMAA calculation may drop to a lower tier or disappear entirely, reducing your Medicare premium by hundreds of dollars per month. For anyone who gives to a church, a charity, a cause they care about, and who has an IRA and is taking required minimum distributions, a QCD satisfies your withdrawal requirement, eliminates the tax on that amount, and can simultaneously reduce your Medicare premium and your Social Security tax. It is one action that cuts 3 separate bills at the same time. This is the win for the comfortable retiree who has built up IRA money and is looking for ways to reduce the tax and premium costs that come with taking distributions. If you are in this situation and you are not using QCDs, this is worth a serious conversation with whoever helps you with your taxes. Let me bring all 6 of these together before you go, because the action items are what matter here. Bill number 1, Medicare Part A premium. If you are paying anything other than 0 for Part A, call Medicare and have them review your work record. If you have 40 quarters of Medicare taxes paid, your premium should be 0. Bill number 2, Medicare Part B premium under QMB. If your monthly income is below approximately $1,350 single or $1,824 married, apply for the Qualified Medicare Beneficiary Program. It eliminates your Part B premium and all Medicare cost sharing completely. Bill number 3, prescription drug costs under Extra Help. If your annual income is below approximately $23,940, apply for Extra Help at ssa.gov. Your prescription copays drop to under $5 for generics. If you are already in a Medicare savings program, you are automatically enrolled. Bill number 4, IRMAA surcharge. If you are paying more than $185 per month for Medicare Part B and your income has dropped since 2024 due to retirement or any qualifying life event, download Form SSA 44 from ssa.gov and file the appeal. This one is for the higher income retiree and it can be worth hundreds of dollars per month. Bill number 5, illegal cost sharing bills. If you are enrolled in QMB and a provider sends you a bill for Medicare cost sharing, you do not owe it. Contact your state Medicaid office or SHIP counselor. If you are in a Medicare Advantage plan, know your annual out-of-pocket maximum and do not pay beyond it. Bill number 6, income-driven Medicare and tax costs. If you are 70 and a half or older with IRA money and you give to charity, use qualified charitable distributions. They lower your income, reduce your IRMAA tier, reduce your Social Security tax, and satisfy your required minimum distribution simultaneously. None of these require a lawyer. None of them cost money to apply for or file. They are legal protections and federal programs that exist specifically because you paid into this system your entire working life. The only thing standing between you and this money is knowing it is there and taking one step to claim it. I put together a free retirement medical bill checklist that walks through every one of these 6 items: what to check, what form to use, what number to call, and what deadline to watch. And do one more thing before you go. Send this video to one person in your life who is over 65, a parent, a neighbor, a friend from church. It does not matter whether they are getting by on a single Social Security check or sitting on a comfortable retirement account. The odds are very good that they are paying at least one of these 6 bills right now for no legal reason at all. And one conversation could be worth more to them than anything else you could give them this year. I will see you in the next one.